Amex Platinum versus Chase Sapphire Reserve. Is it still worth it? You will want to see this. Before we dive in, if advertisements should pop up in this video, please do not click off of the advertisements. Please allow them to play through as a thank you to me for bringing you this honest, valuable information for free. Now let's continue. Whether you are in New York, London, Sydney, or Dubai, the rules of high-end credit are shifting. We are no longer in an era of simple travel perks. In the current economic cycle, the battle between the American Express Platinum Card and the Chase Sapphire Reserve has evolved into a sophisticated game of capital allocation and liquidity management. For the modern business owner or high-net-worth individual, these cards aren't just plastic in a wallet. They are tools for optimizing a corporate credit profile. But as annual fees climb, with the Amex Platinum at $895 and the Chase Sapphire Reserve at $795, the question isn't just which card is better, but rather, is the math of these coupon books still working in your favor? Today, we are breaking down the institutional value of these two titans to see which one deserves a spot in your wealth-building strategy. The core framework of premium credit. To understand if these cards are worth it, we have to look past the shiny metal and analyze them through the lens of liquidity management. Most consumers see an annual fee as a cost. An institutional thinker, they see it as an access fee for a suite of cash-equivalent offsets. The strategy here is arbitrage. You are essentially trading a fixed annual cost for a variable but high-value stream of benefits. If you can extract $2,500 of value from an $895 fee, you have achieved a massive return on your capital. Now, while the US market is the primary driver of these aggressive rewards, my viewers in the United Kingdom, Singapore, and Australia should note that while your local versions of these cards might have lower fees, the underlying principle of leveraging spent capital into travel and lifestyle assets remains identical. Basically, what I'm saying is that these cards serve as a hedge against travel inflation. When you use points to book a business class seat that would otherwise cost $5,000, you are performing a form of asset-based lending against your own spending history. You are essentially borrowing against your past consumption to fund future luxury. This is the secret sauce of high-net-worth wealth management. Never paying retail for something that can be subsidized by your cash flow. The US strategy, Amex Platinum versus Chase Sapphire Reserve. Let's dive in and break down the primary case study, the US-based versions of these cards. This is where the highest bid for your loyalty happens. The American Express Platinum, $895 annual fee. The Platinum card has essentially become a high-end lifestyle subscription service. Amex has leaned heavily into the coupon book model. You get $200 in Uber Cash, $200 in hotel credits, $240 in digital entertainment credits, and even a $155 Walmart Plus credit. But here is where the B2B value really sits, the Global Lounge Collection. For a business owner who uses travel as a networking tool, access to the Centurion Lounge Network and Delta Sky Clubs is a massive boost to productivity. Imagine, instead of sitting at a noisy gate, you are in a private suite with high-speed Wi-Fi, conducting a board meeting or closing a deal. That's not just a perk, it's an operational efficiency. Look, the point is, if you are already spending on these services, the card effectively pays you to carry it. However, Amex uses a no preset spending limit, which is a powerful tool for capital allocation. It allows your purchasing power to adjust based on your usage, payment history, and financial resources. In reality, This acts as a shadow business line of credit that doesn't necessarily appear as a maxed-out loan on your personal credit report, provided you manage the monthly balance effectively. The Chase Sapphire Reserve, $795 annual fee. The Sapphire Reserve takes a different approach, focusing on simplicity and high-velocity rewards. Its $300 travel credit is incredibly flexible. It's basically a cash refund on the first $300 you spend on anything travel-related, from tolls to flights. The real alpha here is the points boost. When you redeem points through the Chase Travel Portal, they are worth 50% more. For a business focusing on overhead reduction, this 1.5x multiplier on travel spend is a significant margin improvement. As it turns out, Chase has built an ecosystem where your points are essentially a secondary currency. Furthermore, the Sapphire Reserve offers primary rental car insurance. Now, you might wonder why that matters. For a high-net-worth individual, this means if you wreck a rental car, you don't have to file a claim with your personal insurance first. This keeps your personal premiums low and protects your long-term liquidity management. It's a subtle form of risk mitigation that many people overlook until they actually need it. Global Bridge, International Perspectives. Now then, moving on to my international audience. While Chase doesn't offer a direct Sapphire Reserve equivalent in every market, the principles of capital allocation stay the same. Canada. You should look at the RBC Avion Visa Infinite Privilege or the Amex Platinum Canada. The Canadian Amex Platinum mirrors the US version, but with a heavier focus on Air Canada benefits through the Aeroplan partnership. United Kingdom. HSBC Premier and the UK Amex Platinum are your primary vehicles. In the UK, the Section 75 consumer protection is a massive legal advantage of credit over debit, essentially providing a government-backed guarantee on your purchases, a must for any major corporate expenditure. Australia. The Commonwealth Bank Ultimate Awards or the Amex Platinum Australia are the leaders. While Australia uses the Equifax or Experian metrics instead of the US FICO, the goal is the same, building a profile that allows for future asset-based lending. Singapore and UAE. In high-growth hubs like Singapore, via DBS or HSBC, and Dubai, via Emirates NBD. These cards are often tied to priority banking status. In the UAE, the Amex Platinum offers massive welcome credits, an AED that can offset nearly the entire fee in year one. The thing is, whether you're using FICO in the US or Ilion in Australia, the banks are looking for the same thing: a history of managing high-limit accounts responsibly to justify future business credit lines. Advanced Capital Allocation. The power user setup. Alright, moving ahead, let's talk about how you actually win this game. Many people think it's a this or that choice. In fact, most high earners use both. This is known as the points portfolio approach. By holding both, you are diversifying your assets. If Marriott devalues their points, you can shift your Chase points to Hyatt. If Delta makes it harder to book seats, you can use your Amex points to transfer to British Airways or Emirates. This is arbitrage at its finest, moving your digital assets to where they have the highest purchasing power at any given moment. Suppose you have a $50,000 business expense coming up. If you put that on a standard bank debit card, your return is zero. If you put that on an Amex Platinum during a welcome offer period, you could earn 150,000 points, worth roughly $3,000 in travel. That is a 6% tax-free rebate on your business operating costs. When you look at it that way, the annual fee becomes a rounding error in your broader capital allocation strategy. risk management, and the action plan. So, how do we implement this without damaging our credit profile? Here's the thing. You must treat these cards as a liquidity management tool, not a debt tool. The 10% utilization rule. Even with no preset spending limit cards like the Amex Platinum, keep your internal balance low relative to your documented income. This strengthens your corporate credit profile. Strategic churning versus relationship building. While it's tempting to churn for the 150,000-point welcome offers, institutional lenders like Chase and Amex value long-term stickiness. A 10-year relationship with Amex can open doors to a business line of credit that a new account simply won't. The effective fee calculation. At the end of every year, perform an audit. If you didn't use at least 80% of the credits, the card is a liability, not an asset. Imagine your annual fee as a cost of goods sold COGS. If it's not producing a return in travel savings or lifestyle efficiency, it's time to move on. The way I see it, the most successful individuals don't just spend money, they orchestrate it. They use the Sapphire Reserve for its 3x points on dining and travel, and the Platinum for its 5x points on flights, and its concierge services. This creates a high-velocity reward loop. Let's now summarize everything we have discussed and look at the main takeaways. We've seen that the Amex Platinum is a premium lifestyle and networking tool, best suited for those who value lounge access and a wide array of merchant credits. On the other hand, the Chase Sapphire Reserve is a high-efficiency travel engine, offering superior point redemption flexibility and primary insurance protections. Ultimately, at the end of the day, these cards are only worth it if they align with your capital allocation strategy. If you are a business owner or a high-frequency traveler, the arbitrage between the annual fee and the provided benefits is still heavily in your favor. However, in the current economic cycle, being passive with these cards is a losing game. You have to be intentional. If you found this breakdown of high-level credit strategy helpful, join our community of responsible credit builders. We focus on leveraging financial tools for long-term wealth, not just short-term perks. Disclaimer: this video is for educational and entertainment purposes only. I am not a financial advisor. Credit cards involve risk, and high-interest debt can be damaging to your financial health. Please consult with a certified financial professional before making significant changes to your credit or investment strategy. Always read the terms and conditions of any financial product.